And it's not easy. Okay, the breakdown is in progress. And what I'm seeing right now is that the major fault lines are in the treasury bond market and the banking system. And if the irony is really choking, ironic, that QE never fixed anything. QE guaranteed the financial breakdown.
Kept the people asleep longer, too.
Well, let's look at why. So the Fed comes in and says, we'll be the buyer of U.S. government debt, and we'll be the buyer of redeemed Wall Street held government debt. In other words, future issuance and past issuance. They'll cover the upcoming deficits for the government that are made into treasury bonds. They'll cover that. But they'll also cover the 2-year, 5-year, 6-year-old treasury bonds that Wall Street owns. So what's the result of that? A lot of legitimate buyers said, we don't need to buy anymore. A lot of legitimate investors said, let's get rid of ours. If the government's going to be buying it, then let's just get rid of ours and we can do something useful with our money. You know, like invest in a business. Okay, so the Fed destroyed the bond market by discouraging active new investors. Wow, that is huge, ironic. What were some of the other effects? Well, you have to look at the 0%. Distorted all the financial markets. It encouraged the emerging market nations to borrow a lot of dollars, and now they're going to default. So the boomerang is that the big U.S. and London and Western European banks are on the hook for between $6 and $9 trillion of bad U.S. dollar debt issued since Lehman. And why has it gone bad? Well, their currencies have fallen. They were told you got no risk here with this near 0% loan to say Bangladesh. What about the currency risk? So their currency's down 20 and 30 and 40%, and now their loan's up 20 and 30 and 40%. And they're going to default on it because not only that, but the export business is damaged. They're not exporting oil like they used to, or copper and aluminum and other minerals. So the whole commodity structure for their income stream is down. Okay, well, why is it between $6 and $9 trillion for emerging market debt? Well, basically because how do you define an emerging market country? I don't know what the list of countries is, but their debt is very well known. They're going to start defaulting. Are they going to do another central bank agreement not to mark to the market on the emerging market debt? Hell no, because they're not American. They're going to try to go in there and steal, seize, confiscate their assets. So in that sense, 0% not only brought about destruction of the global economy, but it provided an opportunity for the Western bankers to seize assets like we've seen the demonstration in Greece. Well, I tell you, it's so broken. You're asking me what should people do? What can people do? They need to bail out of their bank accounts before they're bailed in. They need to bail out of their stock accounts because doesn't it make a lot of sense to sell out to the Fed and Wall Street who are propping up the stock market? Sell it to them and buy what they've been suppressing in price, namely gold and silver. Makes perfect sense. Or, no, I'm sorry, the dumbasses out there would much rather buy what's already high because it's going to go higher. No, the public usually makes the wrong decisions. I'm telling you what the right decision is. You sell your stocks and your bank account CDs and you buy gold and silver because silver's going to rise tenfold. Silver's going to go almost to 200 with relative ease. We're going to have to bring about an equilibrium in supply and demand. What a novel concept!
Shouldn't the market do that, Jim?
Yeah, well, there is no market. And that's why the Chinese are going to take it away and take control and impose new measures for gold and silver that allow its price to rise, and it's going to break a lot of Western banks. I'm hearing that there are a lot of deals in the works now for the Western nations to abide by a global pact where the dollar will be replaced by a table of gold-backed currencies. Like the one that we hear about the most is the gold-backed RMB, the Chinese currency, the yuan.